Welcome to episode number 124. I'm your host, Tamera Gaede, and today's guest is going to help me talk about why relationships still win over AI in real estate right after this.
Gather round the table, pull up a chair. Real talk, real growth, we're taking you there. From the first handshake to the final key. The wisdom you need to set your business free. It's the closing table with lawyer's title. Tamera Gaede, she's your main arrival. Yeah, Tamera Gaede makes the vision clear. With lawyer's title, your best year's here.
Welcome back to the show. Again, I'm your host, Tamera Gaede. I am really excited about today's guest. Him and I, we've been talking for a while now about some of the challenges that lenders and realtors are facing with consumers using AI. So I'm excited to welcome Brooks Kelly to the show. He is the division manager and loan officer for American Portfolio Mortgage. He's got 19 years in the mortgage industry, his own podcast called Brooks on the Money, and he is also a loan officer coach for Go Coaching. So definitely an expert here. Welcome to the show, Brooks.
Thanks, Tamara. That was a mouthful, wasn't it?
Hey, I got it.
You
One
did.
take Tamara,
Exactly.
right?
Yep.
Yeah, well, not always one take, but we try. Okay, so, hey, I've really appreciated our offline conversations, and I've been following you a lot more on social media, too, since we first met. And a lot of the social media content, guys, if you're not following Brooks, you need to, because a lot of the content you roll out is really focused on real estate transactions, realtors, the challenges they face, and kind of market snapshots and your take on the market snapshot. Mm-hmm. I think it's really intelligent, and the stuff that you're rolling out on social media. So thank you for being of service to the real estate industry, and I value your content. So I'm excited to talk to you today.
I appreciate that. Thank you.
Yeah. And we're going to continue working on some stuff together, and I'm very excited about that too. But for now, let's get started on our topic today. The first thing I want to bring up is, did you guys see this article? This is from Realtor.com about the man that used ChatGPT to sell his home. And I saw this news article on a lot of platforms on social media, and it talked about him doing that. But what it didn't talk about were the challenges that the realtor on the other side faced. And did he leave money on the table because he wasn't using a realtor to help him through the transaction?
Yeah.
So if you guys haven't checked out this article, do it. It's really interesting, but it also sets the stage for our conversation today and hits home on something I'm going to continue to talk about on the podcast. Mm-hmm. And that is how our real estate professionals work with consumers that are trying to use AI for their real estate transaction.
Yeah. Yeah. It's a challenge every day, we see it, we use it, and, consumers are talking about it all the time. You can't really get away from it, and it's going to get worse.
It's going to get worse.
Yeah.
So I want you to tell, you have an experience or more than one experience with a buyer using AI to help them on your side, on the lending side of things.
Yeah.
So can you tell us the case study or the
Sure.
experience you had that we talked about yesterday?
Yeah. Yeah. I mean, again, there's a lot of those experiences that we have. The one in particular just happened. It happened last week. And the clients, they're researching like they have on Google, but now they're in a place where they're starting to trust the answers that are coming out because they don't have to discern what's right or wrong. If they believe what ChatGPT says, then they ask it a question and it tells them. But what it doesn't do is give them context to what the answer is, So the question that came to me said, and he even told me straight up, I've been looking on ChatGPT and it says I can buy a house with 3.5% down. So that's about $12,000 or so. But it says the closing costs are $10,000 to $15,000. Is that right? And he's like, I keep asking it and it says it is, but I don't really know. And I said, yeah, it is correct in some way, but it doesn't provide the options or what happens with how do you negotiate for those closing costs? What is the seller going to pay for those? What do those include? Lender fees and title fees and escrow account deposits and points and appraisals and all that stuff. Like, it can break it down, but it doesn't give them the reassurance that a human is going to give them. The experience that I have at 19 years of doing this and 3,000 transactions later, how does that explain something that I have that kind of experience and knowledge with, and market knowledge too? Because it could be very different from Idaho to Texas to California or wherever you're buying a home, and what is that particular market like, and how does that work in your market?
Yeah, I'm coming out of these educational rooms, and my AI experts continuously talk about how ChatGPT hallucinates, and it doesn't cite sources of where it gathers information. So it's not the AI tool to use for this kind of thing in the first place, right? So, and then also to your point, you have the expert. Did you say 3,000 transactions?
Yeah, 3,000. Yeah. It's been a long time, 19 years,
That's a lot of transactions. That's a lot of experience, right?
Sure.
That speaks to your experience level. And I think, the challenge here is kind of disarming the fear that we're going to get replaced, right? I don't think that that's going to happen. What I want to ask you, I've got some follow-up questions to this example that you're using.
Sure.
Was his information inaccurate?
It wasn't inaccurate. No, I mean, that's right. It's, on a $300,000 to $350,000 home. Yeah. 10 to 15,000 is probably really close to what that number is going to be.
Okay. And so then you had to kind of walk him through what he did miss, right? Yeah. As far as AI. So how did you guide him from there?
Well, it's that he doesn't know what questions to even ask the AI.
Right.
Like, he's got very high level questions. What's the rate? What's the, the same questions that borrowers ask us. And until they really get into it and they understand it and know what to ask it, then they don't know what to ask it. So it'll give you all the information that you're looking for, but you don't know exactly what you're looking for as a first-time buyer. So we went through everything with him, from top to bottom, what options are available, down payment assistance loans, what the seller could pay for him. Because his ultimate thing was, I'm good with being $12,000 out of pocket. I'm not good with anything more than that. How do I get into a home for that or less? That didn't tell him that.
Well, and don't you think the challenge is, until he identifies a house, we don't know what real numbers are going to look like anyway, right?
Yeah, it's all in theory. But there are instances, we go through a very detailed loan consultation with every client to make sure that they understand and they get those questions answered, because they're very nervous coming into this, like this is the biggest purchase of their life. They've heard all these stories about it. And so they can gain as much knowledge as they possibly can online. But until you have someone that's been through it and can explain it to you, they don't feel comfortable with it. So we go through all the scenarios and all the what ifs, and we get their goals and what's their absolute cash out of pocket number that they can be. If this is it, then they need to shop for homes that will give them a $10,000 seller credit.
And
if
understood
not,
what
they
his
can't
limit
buy
was.
it. Yeah. So he's got a limit, and this is the limit that we're going to set. This is what we're going to tell your real estate agent, and this is what you have to go find, or else you can't buy that house and you have to move on. So you have to understand that, Mr. Buyer, that you can't buy this home if they won't give you that credit. And as much as you love it, you have to move on because somebody has to pay your closing costs, and it's not going to be you.
That's a really difficult conversation, because the home, when a buyer identifies a house, a lot of times it's emotional, right?
It's always emotional.
It meets needs. They have the basic needs that their list, their check box, that their list of things that they have to have, and they check all of that off. Yeah. But when they fall in love with a house,
how do I get to this home? What way can you make this happen? I give them their options, here's where it is, okay, well, you can't go with this loan. We have to go with this one, or you have to pull money from your 401k, or you have to find a relative that's going to give you a gift. But if you want this home, it's been on the market for one day and the seller is not negotiating. So you're going to have to pay your closing costs, and you have to get from point A to point B. If you absolutely love this home, you have to find a way. And I'll give you all the ways to do that. It's just up to you to figure out what you can do.
So the one thing that he said that was kind of an identified marker is the 12,000. I can't go above 12,000 out of pocket. That's all I got, right? Yep. Mm-hmm. You back the numbers out from there, get him to his mortgage payment.
Yeah.
Good lenders will focus on what your monthly payment is, not what rate we're at right now. Focusing on just the rate isn't going to get you there. You have to really understand what your monthly payment is going to be.
Totally.
So you don't get in trouble.
Well, and they don't understand it. They don't know what taxes and insurance and MI and HOA dues and all the stuff that goes into that. And so, if you fall in love, and it's less and less these days that it comes in the backwards way. Probably in the early teens, we got a lot of contracts and people would already be under contract or negotiating a contract and like, hey, we need a pre-qual letter, and they've never talked to a lender before. I feel like they're more educated these days, or at least they're putting, the cart before the horse before the cart now.
Yeah.
So
I wanted to you said something that I thought was interesting. You said you go through this detailed, list of things or analysis of what the buyer can do. Can you kind of compare that to what he found on AI? Like, what was he missing, right? What were the key things that he was missing when he did his analysis on AI versus your conversation with him?
Options,
like loan options, different loan
just
options?
options in general, because it gave you what an FHA loan was and what it required and how much the closing costs were. But how does that relate to this particular home, and how do I navigate that? It gave him all the details. I don't think it was wrong in anything. I didn't see the actual printout from ChatGPT, but from what he told me, the numbers were fairly correct. But what it can't do is then take his loan application and then educate him on exactly what he can do and also make him feel good about it. Like there is a relational thing in there. And I think what realtors and loan officers have to understand is AI is going to supplement our business. It's going to enhance our business. It's not going to replace us. There's always going to be a need for a human element in there.
Well, and once you had that conversation with him about, hey, you got a good overall look at what this is going to cost you, it sounded like you really connected with him and told him, hey, this is what you also need to know, which is a really good tool for the relationship building so you can keep the business from the buyer, right?
For sure, yeah, absolutely.
And I know you spend a lot of time with educating realtors too. Is this something that you're finding that's becoming a really hot topic in conversations in rooms right now?
I feel like it's one of the only topics, it's like used to be like, what's the rate? Now we talk about AI along with it,
we for sure talk about AI and where to start and how to use it and all of those things. But, I have had some closed door meetings with some clients that, but I find that they have a fear that AI will replace them, but they don't really know how that would happen or why that would happen. I believe that real estate is a relationship business, 100%, and AI can't replace that. So I think this use case or this particular
if we go back to the article you're talking about, though, yes, that guy was able to complete a transaction that way. Can you have it analyze the contract? Yes. Can you answer your questions from it? Yes. Does he really know, especially in Texas, do you really know what the true value of that home is? It's a non-disclosure state. So you don't know what the homes in your neighborhood truly sold for.
Yeah.
You can make a good guess at it, but he also missed the open market and putting that out there. And maybe it was a very desirable home that would have sold for more. And maybe he had it underpriced and it would have got into multiple offers. Maybe during the repair negotiation, there would have been other conversations that would have happened. And honestly, from a lender standpoint, my nightmare is a one-sided transaction where there is a party that's unrepresented.
Yeah.
Because it's up to one agent to now lead it, and there's one-sided negotiations, and nobody sent the right paperwork, and nobody sent the contract to the title company.
Right.
How to get to the earnest money, how to get the earnest money to title, when you have to get it there. And there's just so much that agents have to do to lead those clients. A one-sided transaction is a nightmare for all of us.
No, I 100% agree. There's a lot of heavy lifting that has to happen on the other side, the realtor on the other side, to get this across the finish line. And by the way, the goal is to get to the closing table, right?
Yeah.
So my realtor friends will do whatever they have. I mean, any kind of unrepresented transaction, not just somebody using AI, a FSBO or whatever it may be, that it puts a lot of weight on the realtor. And Jesse, I wish you could chime in on this because, there's a lot of lines you can't cross either. You can't help them negotiate. You've got a fiduciary responsibility to your client, right? So, these unrepresented clients, didn't that article say he lost out it could have cost him up to $225,000 in profit because he didn't use a realtor. And that's because somebody doesn't want to pay realtor commission. By the way, you still would have won if you'd have hired a realtor.
Didn't even have to be that much. You know? lost out on 50 grand, you know?
Yeah, that's incredible. That's a great story to kind of hit our point home.
Yeah, you'll see it more often, and that got pushed out there because it was the first one. I'm sure other people have done it, but there's so much that they're going to miss because they don't know. I mean, going to a real estate agent that's done 200, 300, 400 transactions, you're going to pick up things in places that you don't even know exist. You know?
Yeah. So at the end of your discussion with that buyer, what was his temperature? Meaning, like, did he understand the importance of using a trusted lender like yourself?
100%. I mean, he's a raving fan of ours. Yeah.
I love that.
Yeah. I mean, he's all on board, and we're sending him estimates today on a house that he found. So,
oh, that's cool. I want a happy ending to the story. So.
I'm sure we'll find one. I'm sure.
And I'm glad that you got the opportunity to work with him. And that's a testament to the time that you took to walk through that with him.
Yep.
So we kind of have another use case that we wanted to talk about, relationship over rate. We kind of tapped into it just a minute ago. But can you describe the other use case where a consumer used AI to compare quotes?
Yeah. This was probably one of the first times this is last fall, I think, of when it actually came into play in our world. And, you know, I'd talked to the client and gone over everything. And then I called him, you know, the next day to check in and see which direction he wanted to go. And he said, well, I've already made up my mind. I've already done all the analysis. I said, great. What'd you come to? And he goes, well, I put it into your estimate and the other guys into ChatGPT, and it broke everything down and it put it in a table and it compared rates and fees and it told me which one was the best one. And I said, well, you know, did we win?
Yeah. What was the result of the comparison?
The result was that everything was very comparable. Like, he shopped us with someone and their rates and their fees and everything were very much in line with ours. And because of that relationship that I built with him, we ended up winning that deal as well. So
nice.
Yeah, right.
I love that. Relationship building. AI can't replace the relationship building part. And I think that's kind of what we're trying to talk about today.
It augments it, right? You know, it gives you enhances your experience. And so as a professional on my end, how do I then utilize that same thing to then give the client that information without him having to then go do it himself?
Okay. Well, how do you do that?
I mean, we've done a lot of different things. The way you can build apps now, you know, like you can build your own app for anything just by telling, you know, whatever system it is that you want to do it. We use Vercel for one, and we created this bridge loan calculator. So we have a bridge loan.
Oh, that's interesting.
Yeah, we have a bridge loan thing that tells you if it makes sense and what the costs are and all that stuff. And we created that so a consumer can plainly see this is the benefit of using a bridge loan and how it works.
Yeah, there's a lot of talk about bridge loans these days. Yeah. You know, it's funny because products or different types of products come and go, right?
They fit the market.
Yeah,
right?
after you've been in real estate for like over 15 years, you've seen the products come and go.
Yeah.
So what are kind of the most needed products that you're working with right now? Do you want to talk about some of your highlights?
I mean, that's a big one right now. We utilize that bridge loan a lot. You know, it's a great program where you can, you know, use 80% of the equity in both homes. So you could 100% finance the new house they're buying, so you can sell their house for more money. So bridge loan has been huge for us.
That's a big deal because your contract's not tied up in contingency issues, right? And so you can move on and move into the house you need to, you want to move into.
Makes you more competitive on your offer because there's no contingency. And it makes your house sell for more because you can stage it and get out of it and do the things that you need to do. Get the dogs out or your grandma or whoever lives there. And so you're not constantly having to move people out. I call it a convenience fee, really.
Yeah.
It is more costly than doing a regular loan, and again, you could save more money or make more money doing it. So
I've only sold one house in my lifetime because I don't believe in selling houses. I believe in turning them into rentals.
Yeah, I agree with you. Yeah.
But let me tell you something. That was not fun. Like, you know, somebody wants to see the house in 30 minutes. I'm in the middle of a project at home. Got to get the dog, got to get everything cleaned up and looking pretty again and get rolled out. And by the way, when I'm working on projects at home, it's kind of a mess. You know, I'm very organized person, but it doesn't look that way when I'm actually working on something. So that wasn't the easiest thing in the world, right? And so all the showings and making sure my house is pretty put together all the time. But, you know, all the things that you had to do to sell the house, much easier to be a buyer. but the paperwork's a lot thicker
Exactly.
on a financed buyer. So
And trying to time it with a buy and a sell it's virtually impossible.
it's really hard.
Yeah.
It's really hard.
Yep.
Well, I'm really glad to hear that you won that deal. Okay. And so then we talked about kind of bridge loans. Are there any other products that we want to kind of talk about? I mean, we were on the cusp of interest rates dropping and then bam, they went right back up. So, the products that we thought might phase out a little bit this summer, like rate buy downs and stuff like that's really important again to help buyers get into homes.
Yeah, I mean, the rate conversation's definitely more of the transaction than it was a month ago. Rates were coming down. And when that happens, the buyers kind of release a little bit and they're not so uptight about it and they don't shop it with so many different people. And so, what we've seen from rates going up is the shoppers, the shopping mentality has come back because even in their mind, even though they've heard rates have gone up, they weren't bracing for 6.5 or, slightly higher on a conventional
What
loan.
is it today? I don't even know. Like
It's
the last
about that, yeah.
6.4 on a 30-year fixed. Well, it came down a little bit because last I checked, it was like 6.74.
Yeah.
Oh, well, why am I looking at him? What are the rates today?
Yeah, I mean, that's about where they are. Like, depends on the scenario, how many points you want to pay.
Yeah.
So the strategy with the client earlier, we were talking, okay, where do you believe that the market's going to be? And does a refinance even make sense later on? Or let's buy an extra point or two and just permanently buy it down so you never have to worry about that.
Permanently buy it down as opposed to like it going back up later.
Yeah, the temporary buy downs they're okay as long as the seller's going to pay for it. But ultimately, you're just financing your future, and that money is just sitting in an account to supplement your payment. So it's utilized a lot. The builders love to throw that out there.
I know,
and
but
tease
I
people,
feel like it's creating a bad situation for the buyer.
It is.
Whenever it goes back up. Because they've forgotten, right? They forgot. All about it.
Or their taxes go up
Yes,
with it, and
and
then
insurance.
their payment really, exasperates a lot of buyers. So.
Okay, so buy downs, bridge loans, anything else that's you're seeing?
No, I mean, we're still seeing a lot of clients wanting construction. They still want to build or move out to the country and buy an acre or two. And so
I do, but I don't want the. It's already hard enough to get in.
Yeah.
Well, it's already hard enough to get in town right now. Salon is a mess. It is a mess. And every day it's a new challenge of like, how am I going to weasel around to get to, it's never taken me this long to get Frisco in my life. But by the way, I did this to myself. I knew what I was getting into, not the point. So keep going. I want to hear the rest of what you were going to say.
No, I mean, construction loans are big. Manufactured construction loans are big. So clients that are first-time buyers, I think it's a very affordable option for them to go.
Explain. I don't know that I know what that is.
Yeah, it's not a product a lot of people have. It's something our company does, but it allows them to purchase the land and the mobile home at the same time. So puts all the utilities in, it adds the decking and the underpinning and allows them to essentially build a home, but it's a manufactured home. And it's very affordable to do it that way. So.
That's an interesting. I didn't know about that product. I want to pivot for a second. Can you kind of talk to my realtor audience about some of the challenges that you're facing with buyers so they're prepared? What's going on right now, with the buyers? How are we helping them get into homes, but are there problems along the way?
I mean, problems. Debt to income ratio. Affordability is a big problem for people. So talking them through that and understanding their budget better. I find the more we can talk to them, the more open they are. If we just send them rates and payments and this is what it is, they get really scared and they don't know. So we really have to help calm their fears.
That's the point of having a relationship with a lender. You can go to Rocket Mortgage for that stuff, but that's a terrible idea for a first-time home buyer or anyone that's not savvy with navigating the real estate transaction process.
Yeah, it's just they're very scared of it. And so I think that's one of the biggest problems. I mean, all the other problems are the same, right? Their credit scores aren't good enough, or their income isn't where they want it to be. Self-employed buyers, always a challenge because they always make way more money than they show on their tax return. So it's a double-edged sword for them. You're going to cheat the IRS, or you're going to cheat the lender, one or the other. So we try to find alternative ways for them through bank statement loans. We're seeing a lot of
DSCR loans. You doing a lot of that?
Yeah, for investors, we
Yeah.
do a good amount of DSCR.
Yeah, you told me that you have a big book of investor clients. And that's good to know too, because I have a lot of investors and wholesalers in my audience that might want to take advantage of some of the products that you have.
For sure. And a lot of them are in probably higher rates that they bought homes in 23 and their prepayment penalties might be up. So refinancing those DSCR loans have gotten a lot more competitive in the last couple of years.
Oh, interesting. Okay.
Yeah.
Well, as the product gets more popular, that's when it's going to get more competitive.
Yeah,
so.
there's buyers on the secondary market for it now. And so when that happens, it allows rates to go lower.
Interesting. You know, I think helping my realtors understand, like I said, where we're at, right? We kind of took that dip down. We thought it was going to be a lot more robust. I mean, March turned out pretty good for me with contracts.
Pretty good. Yeah, it's probably the best month we've had. I think our company had their best month ever last month.
Are you serious?
Yeah. Yeah.
Interesting. And what do you contribute that? I mean, besides the fact that you're awesome, you know?
Well, yeah, I mean, there was a lot. We had a lot of growth last year. So they added 2 big groups, including ours, last year. And so between that,
the production
and then
came with it.
Yeah. And then just the market hitting at the right time. Like, I mean, I told a lot of people in February, and probably the wrong jinxed us all, you know, but that we were going to have another year like 2019, you know, in early 2020 before COVID.
Man, we were so close.
We were headed that direction, and we've had so many buyers with interest, and you know, some refinances even, and that kind of pulled.
I need a refi one of my properties real bad, real bad. It's kicking my butt right now. So
yeah, what a lot of people don't remember is we're 5 years away from those really low interest rates. It's been 5 years now, so it's
is it time?
It's time for a lot of people. Yeah, it's cycling, and those people that got those rates have to move. There's interest in needing bigger homes or downsizing, or you know, like there's just a natural propensity to move, and they're ready. It's been 5 years, and they're waiting for these lower rates that are not going to come. I mean, 3s and 4s are not coming.
No, and we don't want them to, because there's a lot of problems that we're still dealing with, like big pent-up demand.
Yeah.
You know, because of those 2.5 to 4% interest rates. So, you know, it was really interesting. You know, we were all excited while we were going through it, and it was such a great time, you know, because contracts are just falling from the sky. But, you know, now we're kind of paying for it, and nobody, I don't know that I had a conversation with anybody that saw the after effects, you know?
Yeah, I mean, refi booms don't come around for 2 years. That's never, ever been a thing. Refi booms are 6 months, you know, if they last that long. But what nobody realized at the time is that we pulled forward 5 years worth of demand. I mean, normally in the mortgage industry, we do about $2 trillion a year. For 2 years, we did $4.5 trillion. So we took
that is just such
23, 24, 25, 26 markets, and we pulled them forward because people are like, I need to buy now because we're not going to see these rates again. That's what we told everybody, right?
Right.
We all screamed it from the rooftops, like rates are never going to be this low again. Well, we were right for once, you know?
Yeah.
And so everybody bought, and now they're like, okay, now it's time to sell. But homes have gotten so much more expensive and less affordable because the rates are higher. So 8 million people sitting on the sidelines ready to go.
8 million.
Yeah.
That's a big deal.
It's a lot of people.
It's a lot of people.
Yeah.
It's going to happen. But we've been talking about it since 2023. So I'm just waiting until it actually does.
Rates will just have to come back around and cycle. Yeah. And so hopefully what's going on, you know, overseas ends very soon, and things come back to normal. It's going to take a little bit, and hopefully the inflation doesn't push rates up even more. So, well,
I need to wrap up, but there was one thing that I wanted to touch on before I closed out the show, because you are a loan officer coach.
I am.
And your company is Go Coaching.
Yes. Uh-huh.
So I know that there's a lot of lenders in my audience also. Mm-hmm. What would you like them to know about your coaching program?
Man, it's the best in the country. You know, it's for the modern loan officer. You know, we teach a lot around being seen and known. You know, like you have to be on social media.
Yeah, you do.
So you have to be out there. And even if you don't see the results from it, like tangibly, you see them come in around. I've been doing, you know, videos for 3 years, and our audience is real estate agents. We want them to see us and what we know about the market and what's happening and how we deal with things. So I think it's necessary for LOs to be seen like that. And if you're seen before you're known, liked, and trusted, that's the way you have to be. right? You have to have that presence because people will watch you for months, if not years, before they reach out.
Yeah.
And then they'll reach out and be like, you're my guy.
You know, I think that's a great program to help LOs right now because there's a lot of people falling out of this business altogether. Yeah. So real estate agents, loan officers, it's just been, we've kind of been on the struggle bus, as far as success in the industry is concerned.
Yeah.
So I love that you have a program to kind of help them. Yeah. I always find it, that the loan officers have a really big challenge because, on the title side, I'm a sales rep. I don't process my own contracts, right? I have an escrow team that does that. Thank you. I have the best escrow team in the business, by the way. You guys are incredible. But loan officers have to do it all. They have to be the front marketing and branding person. Plus they have to process they have processors and stuff, but
sure.
They still have to be hands-on with their loan processing, right? So it's a lot of lifting.
Yeah. That's a lot of what we teach and go to, it's about the systems and it's how to grow a team and how to do those things. So me now at this point in my career, that's what I was looking for in coaching is how do I grow this thing without working 80 hours a week, or how do I scale this up? And it's all about having the right team. So while we don't necessarily have to do everything, we're still in contact with the buyers because we are the expert and we do need to talk to them about that. But most of the loan process is now done by my team.
Yeah.
Right.
Yeah.
Not just the processor. I have loan officer assistants and I have people that take care of that stuff. So I can be here with you and they can still process the applications. And then I go do the higher level loan consultation. That's the thing that you really get out of coaching is how to really scale and build that loan officer team.
I think that's an incredible. I love conversations about scaling. Efficiency models. Look, you guys can nerd out on tech. I'm going to nerd out on efficiency models and how to run faster with doing less, right?
Exactly. Yep.
So great place to stop for today. Brooks, I can't tell you how much I appreciate you being on the show.
Thanks for having me.
And look, if you need a great lender partner or you need some coaching on you are a lender and you need some coaching, please reach out to Brooks. He is highly educated. He's got a ton of experience and he is willing to share his knowledge with you. So again, Brooks, I thank you and I reserve the right to have you back.
I appreciate it and I'll come back anytime you want.
Well, that's a wrap on episode number 124. Again, I'm your host, Tamera Gaede. If you like my content, you're really going to love my escrow team. Give me an opportunity to reach out to you about your title needs and make it a great day.
Gather round the table.